Tricky question, right? That's on HDFC Bank. I mean, you know that these are companies that are, of course, great in the longer term, but in the shorter term, there's just so much happening that you don't know which way it would go. But Anuj, you've put together some data on ICICI Bank versus HDFC Bank and how it's pipped HDFC Bank to see its valuations, I think, which have beaten HDFC Bank for the first time ever.
And I'll tell you one thing, if it wasn't for HDFC Bank and its history behind it, its legacy behind it, this would have happened much earlier. And I think HDFC Bank would have fallen 40 or 50% if it wasn't HDFC Bank, based on what has happened over the last 6 months or last 1 year. But anyway, let me just go to the big wall and put it in terms of numbers because, as you rightly pointed out, for the first time, at least since I have started tracking equity markets, and that dates back to 2003, ICICI Bank has overtaken HDFC Bank in terms of valuations. As of yesterday, ICICI Bank is trading at 2.9 times price to book value, and HDFC Bank has come down to 2.6 times price to book value. Yes, you're reading it right, 2.6 times price to book value. Now, just to go back, in 2010, when HDFC Bank was really the HDFC Bank, at that time it used to trade at 6 times price to book value, and ICICI Bank used to trade at 2 times price to book value. After that, you started to see, of course, some moderation, and the new normal for HDFC Bank was 4 times price to book value. 4 times, below 4 times price to book value, it fell once after COVID, but that was an aberration. And after that, in 2021, it fell below 4 times for good. And after that, it's consistently derated. And it reached a stage where after this quarter's numbers, it has fallen below 3 times price to book, I think for the first time in my memory. Maybe Rahul will have more details whether it's traded at these valuations earlier ever. Of course, ICICI Bank, on the other hand, is almost reaching its peak valuation. And if you look at the next plate, what's going to be very interesting is the stock returns. If you look at 1 month return, 6 month return, 12 month return, and 5-year returns, 1 month return for ICICI Bank is flat. It's not as if over 1 month or 6 months ICICI Bank has raced through, but HDFC Bank in same period has fallen about 15%. Over a 1 year period is the underperformance really stark. 16% up move for ICICI Bank, 13% downtake for HDFC Bank. That is 30% underperformance. And if you're looking at a 5-year period, ICICI Bank has gone up 180% in that 5-year period, and HDFC Bank has gone up only 37%. It's not even beaten the fixed deposit. I mean, you would have made more money in HDFC Bank's fixed deposits rather than you would have made in the stock price. And there's a very interesting report which has come from Macquarie, which is the title is "Long Journey Ahead" on HDFC Bank, and their point is that names might pick up, but they'll pick up earlier only by yield pickup, and only during the later part will you see the pickup be driven by the replacement of this high-cost liabilities that you acquired from the erstwhile HDFC. So, of course, that's been the big debate this week, that whether HDFC Bank will see more derating or it's already done enough by now.
Okay, Rahul, what about you? Your view on it? Thank you for watching CNBC TV 18. For all the latest news and updates, do follow us on our social media platforms.